Hey everyone, Couch Investor back to another video for today. In late night video, we're going to cover Pinterest earnings report. In this video, at the time of making this video, the stock is down around 10%. What happened? So they beat on earnings per share by just a cent, but they did miss on revenue by around $9 million. Now, I already skimmed through the report real quick, and to be honest, it's not as bad as it seems. The reason why the stock is down is because, well, first of all, if you look at the chart over the last couple of months, and actually year over year, it's actually up around 10% or so. Maybe right now with that little drop, a bit less. So the stock itself has been pretty strong. Maybe that's why expectations were maybe a bit higher than what the results have shown. But overall, the business itself is starting to, well, let's say, reaccelerate. They promised margin expansion in 2023. We are seeing some small signs of that already right now, but still nowhere near where we were before. So we're going to go over all of that in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I would really appreciate it if you do. Check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Make sure to check out all the other links in the pinned comment as well. So first things first here, of course, the revenue and all of that, we're going to have a look in just a bit with the slides. But first up, I want to mention here the share repurchase program of up to $500 million that could be used over the next 12 months. I've talked about this in the past. They are free cash flow positive. So if they think the shares are cheap, well, this is no surprise. Now, a little comment here from the CEO, and also, by the way, we have a transition when it comes to the CFO. So 2022 was a solid year as we returned to monthly active user growth, thank God, deepened engagement, and saw our personalization and relevance investments start to pay off. We are building upon this foundation by staying focused on growing monetization per user, integrating shopping throughout the core user experience, and increasingly driving operational rigor. While the industry as a whole is facing headwinds, as we know, we are adapting quickly to a changing macro environment and are committed to creating a more positive online experience for our users and advertisers. Of course, the shopping experience is something that I've been looking out for a while. And as we know, Pinterest is a slow mover when it comes to, well, innovation. Now, when it comes to the CFO transition, so Todd Morgenfeld, CFO and head of business operations, will transition from Pinterest to pursue new career opportunities on July 1st, 2023, which means that effective immediately, Andrea Mallard, Chief Marketing and Communications Officer, and Bill Watkins, Chief Revenue Officer, will now report directly to Bill Reddy, the new CEO. Well, not so new anymore. All right, diving straight into the earnings presentation. So very important to note is that Gen Z is gaining some traction here. So Gen Z was the fastest growing demographic on the platform and grew double digits year over year. Gen Z sessions grew much faster year over year than sessions from older demographics. Nearly half of new video spins in Q4 were from Gen Z users. Not surprised there. Then when it comes to the video, we grew our supply of video content on the platform by 30% quarter over quarter. So these types of information here are always nice to hear. Now, scrolling down and looking at the big numbers, making sure that my face is not covering these numbers here on the side. So revenue. As you can see, growth year over year has been coming down. Now, this quarter we grew 4% to $877 million. Of course, it's an increase from Q3 to Q4. Q4 is usually the best quarter out there. Also a nice increase here in US and Canada. But overall, Europe is down 7%. You will see this in the monetization slide as well. Rest of the world is up 26%. But as you will see as well later on, when you look at rest of the world, well, monetization-wise there is still not there yet. Now, when it comes to monthly active users, remember 1 year ago, well, it started to go downhill. Users were not growing anymore, and so the stock took a huge hit. Right now, it's been since Q4 2021 that we are either growing or staying flat. Of course, at first, Q4, Q1 2022, we grew a little bit, then it stayed stable, but since then, it has been going up bit by bit. So we grew 4% year over year globally, 0% in US and Canada, 2% in Europe, and 8% rest of the world. And now, as I said, ARPU, average revenue per user, Europe is down 9%. Globally, we're up just 1%. US and Canada were up 6%. Rest of the world were up 21%. But as you can clearly see here, rest of the world right now at 14 cents, well, is not really moving the needle much, but it could turn into a tailwind in the future as monetization in these areas, because this is not just the poor countries, right? These are areas that should be monetized much better. And even in Europe, the gap between Europe and the United States, I mean, $1 in Europe, United States and Canada, $7.60. So there still here is a huge gap that they can improve on. And then now we're going into the cost, expenses, and margins later on. So for me, a couple of things that I like, of course, across the board year over year, these have increased. But as for cost of revenue, we can clearly see here, we go from 26% percentage of revenue to 20%. I like that. It's also down quarter over quarter. So we see some improvements there. Same here with R&D, from 24% of revenue to 19% of revenue. I like to see that. This year, sales and marketing, not that much, still at 30% here and actually increased quarter over quarter. G&A to me, basically flat-ish from 7% to 9%. Of course, it is down from 11%. So, I mean, some improvements there. Across the board, I think we will see this continue to decline as they promised margin expansion in 2023. These are the big expectations for me, but for the market as well. As you can see right here, adjusted EBITDA margins have improved from 11 to 22%, but we're far, far away from that 41% in the same quarter last year. And just adjusted EBITDA as well, right? It's down 44%. So there's still some work to do here across the board. Now, before I conclude this video, I just want to show you one example here from the earnings presentation as to why companies like to advertise and use Pinterest. So we're taking this example here from Swoon. So they say here, using the Pinterest Trends tool, home decor brand Swoon noticed substantial growth on searches for terms related to green living areas. Coupled with the 2022 Pinterest Predicts data that spotted biophilic design as an emerging trend, they created a campaign dubbed Green Living, as you can clearly see here on the site. This campaign encouraged people to increase their connection with nature by investing in some of Swoon's distinctive designs in shades of green. Swoon's campaign resulted in full funnel results, with a 48% increase in return on ad spend year over year and a 25% lift in conversion rates compared to other platforms. Of course, we've seen these examples in each and every earnings presentation. It's always great to see some more examples, some more improvements in data sets as well. Now, of course, I want to see that shopping integration fully functioning, because I do think that this is the missing link here. We know that most users that go on Pinterest go on there to get inspired, but also have their wallets open. They go on there, they're looking to get inspired. Why do they look to get inspired? Probably because they want to do something. Their birthday, wedding, travel, renovations. So if they can get inspired and get all of their things already on Pinterest, first of all, it's great for the users, but I think it's also something great for advertisers as well. And this is probably something we're going to hear more throughout 2023. Maybe they'll mention something during the earnings call as well. I'll make sure to add it down in the pinned comment. So that will be it for this video. Of course, I would have loved if the stock reacted another way, but then again, I rather have an okay quarter where I see some improvements, but the market is not that happy, which offers me a great opportunity to add to my shares. Whether or not I will add, I will have to listen to the call to make that decision. But do share your thoughts down in the comments below. If you're still a Pinterest holder, what do you think about this quarter? Put it down in the comments. And if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I see you all in the next one. Bye-bye.